Welcome Forexia fam to the first video in the series of our Forex Mastery course presented to you by the one and only Dylan Forexia. Get your popcorn ready because I can promise you this will be the most valuable trading series you will ever come across on the internet. I can guarantee this to anyone. But first, who am I and why should you listen? All right. My name is Dylan. I started trading in late 2016. I blew my first few trading accounts back then. Late 2017, I had my first 5-figure day trading. I bought my first Bitcoin, full Bitcoin in 2017 for about $900. That's how much it was way back then. I started Forexia Academy in late 2018. Early 2018, I made my first 6-figure trade on Litecoin. I moved to Costa Rica to live full-time in 2019, which has always been a dream of mine. In 2021, I had my greatest single trade. I took a $4,000 account to over $400,000. And from 2002 until present day, I have had the opportunity to mentor tens of thousands of students from all around the world thanks to my global brand, Forexia. My strategy is known to be extremely accurate, have a very little drawdown, have extremely favorable risk to reward ratios. My strategy uses 0 indicators. It works on all pairs and all markets. It takes advantage of major market movements, and before they happen, takes advantage of major market moments before they occur to give optimal use of time. My promise. I promise this program will radically transform your view of the Forex market. I promise the way this program is presented will give you a unique perspective of the Forex market that you have never seen before. We're going to go over some before and afters, but before we go into that, we're going to go into a recent testimonial that a student of mine sent to me. This was actually just a few days ago. You can see this is June 2024 that this student sent this to me. I've had thousands and thousands of students send me testimonials just like this, but this I chose because it was the most recent one. So here is Will from South Africa. He is basically charting up a chart here. I'm not sure if this is the Euro US dollar or which pair this is, but here we can see the signature trade forming, and here we can see his price projection. It's kind of hard to see, but you can see the yellow lines pointing upwards. That was his price projection to hit these green take profit areas. It looks like this is his green take profit area, and the red right here would be right around where his entry is. So here we can see that is exactly what happened. Okay, he said he's been applying our methods and it has been mind-blowing. He purchased the signature trade course in January, and he says the market behaves precisely as you taught. 0 or minimal drawdowns before turning profits instantly. Thank you, brother. Forever a Forexia student. Here's a before and after. Another price projection. This one is on GBP USD 1 hour time frame. Here's the before, and this is the after. So you can see the similarities from this price projection that our student gave us, and this is a price projection that I actually drew up a few months ago on GBP USD. This was a reversal off of the low of Tuesday for a few hundred pips. Here's another price projection. This one is on GBP JPY. This is another version of our signature trade. We can see we're targeting this red stop hunt zone, and then our take profit zone is this green zone right up here. And we can see that is exactly what happened. This is the GBP JPY on the 4-hour time frame. Here's another one. This is the same setup of the signature trade. This is the US dollar versus the Mexican peso on the 1-hour time frame. We are targeting this trap zone, and once we meet this red zone area, we would look for sells, and we would look to take profit at these TP areas right here. And you can see we had a over 2,000 pip 20x return on this trade, on this one single trade in just a few days. This is 1, 2, 3, 4 days it took to move 2,000 pips, or a 20x return. If you put in $100 up here, it would have turned into $2,000 right down here. Here are two more examples. Just another one right up here is the midweek reversal type scenario example, where we have the market working off the high of this red zone here, and then a complete reversal. Zero drawdown on this trade. And then on the right hand side here, this is actually another example that a student sent me of his trade. This was a signature trade on Bitcoin. We can see he drew it up like this, and we see his arrow pushing up here, rebounding off of these lows here. We can see that is exactly what happened. This massive God candle pumped tens of thousands of pips on Bitcoin. So that was an absolutely insane move. You can see he caught it right here with the buy. Another one, once again, very similar scenario, you guys, where we're targeting a red zone, a trap zone, and then we move to our take profit zone. Once again, this was USD CAD 15 minute, and to the right here we have USD JPY 15 minute. Once again, we're targeting the red zone and then pushing into the green zone for our take profit levels. All right, program introduction. So I'm going to want you guys to take notes and ask questions. So I guess you guys can ask questions in the comment section below, but this program was designed for me to be presented in person. So this is going to be a little bit different. This is a slideshow. It has hundreds and hundreds of slides. So you guys can take as many notes as possible and just comment below if you guys have any type of questions that you want to ask me, or feel free to contact me on Telegram, t.me/DylanForexia. So here are some of the rules. No trading until 7 days after this course. Normally this course would last about 7 days if I was doing it in person. So we'll see how long this course lasts over the span of this series of videos. Why do I have this rule of no trading for 7 days? Well, it is because you need to be at your most peaceful state as you absorb the info throughout the next 7 days. So you're going to have a lot of euphoria, and you're going to want to jump into the market right after understanding the basics of what I'm about to show you guys, but that's not the best way to approach this method. The best way is just to absorb everything as possible throughout this video series, and then at the end, take some time to work it into your trading. All right, program expectations. You're not an overnight success case. Nobody is. After this program, you should have an entirely new perspective of the market. Study and backtest is extremely underrated. That is how I have become the trader I am, and how I have gained all of the knowledge that I've gained through backtesting and studying. Learning to trade with absolutely zero indicators. Learning to read the chart at a glance. understand and implement proper risk management. These are all extremely important. Program overview. Once again, no trading for 7 days and have an open mind. These are the only 2 rules. Here's kind of a breakdown of the course. Remember, this was supposed to be done in person, so this is, keep in mind, this is going to be a video series on all of this info combined. So this is day 1, this is day 2, this is day 3, this is day 4, and then day 5, day 6. This crypto day I don't think we'll do, but yeah, day 7 free day. All right, so keep in mind, you guys, this course was valued at over $5,000. I had people pay me in person to come to my house in Costa Rica, and I personally taught them every single thing that is on these slides. And the reason I am presenting this for free now on our YouTube channel is because I want to give back to you guys, and I want to I haven't seen this on YouTube, okay? I've seen similar strategies. However, what you're about to come across in these few videos is going to be the most comprehensive, the most broken down, the most easy to understand, bite-sized chunks of information that, when putting it all together, form a godlike perspective of the market. That's all I can say. All right. First of all, we're going to start by understanding Forex trading retail basics, support and resistance, trends, higher high, lower low, lower higher low, lower high, etc., drawing trends, etc. Support and resistance. We're going to be identifying support on multiple time frames. Higher time frame, the more liquid the level, psychological numbers, and why. These are all different points that we're going to go over. Support and resistance is the framework of the markets. This is the basics for every trader. The training wheels start here. You Google how to trade or Forex strategies, and it turns out support and resistance and trend following strategies is the #1 result. Yet, over 90% of retail traders fail. The reason? They all use the same information. Here we're going to go over support and resistance. We're using real data. So this is real data that I just copied and pasted off of TradingView here. And I'm going to plot some support and resistance lines on this chart so you guys can kind of have an idea of how I plot my support and resistance lines. It's pretty self-explanatory. Now, what I like to do is I like to convert my support and resistance lines into kind of what I call liquidity zones. So I like to widen them, and I call them liquidity zones. So, future tip, liquidity zones is where I look for my entry. All right, psychological levels. These are similar to support and resistance, but what exactly is a psychological level? Why choose 1.95 and not 1.94989? Well, it's pretty obvious. It's pretty easy to understand why. It's because we are humans, and well, if we're looking at this number, it's easier just to type in 1.95, and it's basically close enough to this level to where you're gonna feel okay if you just type in 1.95. So that's kind of the reasoning behind psychological levels, and we'll get into a little bit more in depth on psychological levels in the next slide. So what occurs at psychological price levels? There's more liquidity, there's more volatility, and you have better entries. So here's an example of these psychological levels. We have 1.08, 1.075, 1.07, 1.06, etc., etc. And you can see these psychological levels act very similar to support and resistance levels, where we can see it comes to this psychological level of 1.065 and it rebounds off of it. Then comes up to this next support and resistance level or psychological level at 1.07 and it kind of rebounds off of it. It doesn't break through it, rebounds off of it, and then boom, breaks through it in one candle. That resistance has been turned support. We can see it ventures all the way up to the next one. And we can see that resistance or that rebounding off of that next psychological level. We can see it over and over and over. So this is the importance of understanding psychological levels along with support and resistance levels. Now, identifying and drawing trends. Support and resistance trends, higher high, lower low, higher low, lower high, etc. Drawing trends, etc. So, plotting trend lines, we're going to... So basically, this is how I draw my trend lines. I go and I draw one trend line, just one. And then I will copy it and paste it onto the next trend line. So the opposite trend line. So if this is the lower trend line, I will take this, click, copy and paste, boom, the next one. So they should always give you a perfect parallel distance, parallel lines. They should always be perfectly parallel to each other. And this just makes it easier for you guys to see the trends. I don't like it when my trend lines are all out of whack and they don't look parallel to each other. So that's just my pet peeve, or kind of what I do as far as my trend lines and plotting my trend lines. Then I will add support and resistance after I plot my trend lines. You can see right here it looks like a pretty obvious support, then breaks through that, turns into a resistance, and then boom, we can see once again here there's some support. Boom, we can see that trend line once again used kind of as resistance, breaks through that support, boom, and we can see just how the market reacts at these levels, and that's why we have these support and resistance and trend lines at these levels. All right, now we're going to combine psychological levels and trend lines together. So here we have one trend, here we have another trend, here's another trend. So this is just an uptrend, change to a downtrend, change to an uptrend. Basically, in a lot of consolidation here, but we can see the trends, the uptrends, the downtrends, the shifts in trends, and then if we combine this with the psychological levels, it gives us even more information. Here we can see at these levels that I've drawn in red, there are a lot of there's a lot of volatility, or it looks like the market is respecting these areas. So support and resistance levels plus trend lines. If we take our support and resistance levels and then we draw the trend lines here, here we can see the little uptrend here. Then we have the support and resistance levels as an example. Then we have that downtrend here, that completely shift. But what caused that? Okay, we have two circles now here in red, and we can see right here, if we zoom in, there's a confluence where multiple factors align. Okay, there is a trend line, this trend line here of this uptrend combines with this somewhat downward trend line, and then right here we have intersecting with all of this resistance level. Whoops. Here we have the resistance level once again. We have a nice push up, breaks through this resistance, turns support, come to this level, and we can see it respecting this level, consolidation, and then get to that level again, and we have this a lot of volatility right here. where this confluence is happening, where this intersection is happening. So, what is a confluence? A confluence is basically liquidity. So the more confluence, the more liquidity. What does that in turn entail? That means that the more liquidity, there's more volatility, and the more volatility, that means there's more money in the market at this point. So what is the point to all of this? We could stop here and tell you to start trading with this basic knowledge, okay? This is where the majority of people start and stop and do not study any further, okay? What I have gone through in the past 20 minutes is the basics of Forex trading, right? You find the trend, you follow the trend, you plot support and resistance, you buy the support, you sell the resistance, right? All of that BS has been combined into something called the basic Forex strategy, and that's what's been packaged into a nice little wrapper and fed to everybody on the internet, basically. This is what the 90% of traders use. Now, similarly to chess, there is only a max number of moves that can be made in order to win the game, depending on how the board is structured. The point of the following lessons is to continue building a framework in which you will create your trading plan and structure. So obviously, before we get started in the knit and grit and the really awesome, amazing stuff, we have to go over basic risk management, right? Risk management is one of the pillars to success in Forex trading. So I like to go over basic risk management like this. The essentials is basically don't risk more than 0.01 per trade per $100 in your account. I keep it that simple as that. Create your trading plan. Obviously, this is going to be more elaborated in the future lessons, and this has a lot to do with yourself and your basically your personality. Allow yourself one trade per day at first. You want to go over trading psychology, and we have a book, The Way of the Superior Trader. If you guys download that book, I suggest downloading it. You can find it on our website, or just Google The Way of the Superior Trader. You'll probably find a copy of it. This is a book that I designed for traders to learn more about our strategy and more about the basics of risk management and market manipulation. All right, we're jumping into candlestick anatomy. The open, the close, the high, the low. And I like to turn my candles blue, and instead of red, I like to turn them pink. So here's an example. Here we have candlestick anatomy. This is the high of the candle. We have the wick, the high, we have the close, and here we have the open, and we have the low. So if the price opened here, went up to a high, closed here, went down to a low and closed here, this is how the candlestick would look. And then vice versa, if price opened here and closed down here and had a high and a low, this is how the candlestick would look. So we're going to go much more in depth on candlestick anatomy in the next few slides. So take a moment to draw this into your notes. All right, so candlestick anatomy, candlesticks, and structure. Let's just say this is the daily candlestick. This is how the candle looks on a daily time frame. This is what I'm sure we've seen candles like this before, where we have a nice body, but it looks like a big wick on top, then a little bit smaller wick on the bottom. Well, what happened with the market structure during that day is what we can see on the right-hand side here. So we can see price opened. It probably stayed in consolidation for a bit, and then broke down to the low, broke past the open here, and then spiked back up, created that high, and then came back down, maybe retested that high again, and came back and closed here. So on the left, we see the high, the close, the open, the low. And on the right, we can see the open, the low, and the high and the close as well. And if we package this structure into one little candlestick for the 1 day candlestick, this is how it would look. Same thing. Here we have another candlestick. This is a little bit easier to see. Here we have the open, the low, the high, and the close. And here we have it marked again. This is how it would look on the right-hand side. This is how it would look on a 15-minute time frame in a given day. Okay, we have the open. It ventures down, creates this low, comes back up, creates this high, then comes back down and closes the day off. So this is a 24-hour period. This is what happened in 24 hours of the market moving. We can see the open, the low, the high, and the close. This is all the entire anatomy of this daily candlestick shown here as part of this market structure. So once again, take a moment, you guys, to draw this in your notes. A tip for anybody that thinks that maybe I'm trying or I'm going a little bit slow. There are some people that say I talk a little bit slow, or that I go through these presentations a little bit slow. Feel free to speed up this video to like 1.5 or something. Sometimes that helps people to because this is going to be a very, very long series of videos. So you guys can speed through these videos a little bit faster if you want to put on 1.5 speed. I don't care if you do that. It's fine with me if you do it. All right, candlesticks and structure. Once again, we have another example of Euro USD. This is real data of the 15-minute time frame versus how the daily candlestick would look. So we have the open, the close, the low, and the high. Same as previous. However, the open is on top and the close is on the bottom, giving us a bearish daily candlestick. And if we look on the right-hand side here, this is how the 15-minute chart would look. We have the open here. It comes up to create the high of the day, and then comes down to create the low of the day right here, and then closes off that day right here. So all of this structure, if we take it and turn it into one candlestick, this is how it would look on the daily time frame. Now, once again, we're looking at the same thing. However, this isn't the daily, this is the weekly. So we're looking at 15-minute candlesticks right here, but this is what all of these 15-minute candlesticks make up this weekly candlestick right here. So this weekly candlestick, we have an open, we have a close, we have a high, we have a low. So if the and this is I actually messed up on this one. I think this should be open. Whoops. This should be the open and this should be the close. But whatever, you guys know, you guys get what I'm pointing at here. Basically, this structure of the weekly time frame, this week, has been packaged into this one candlestick. Take a moment to draw this into your notes as well. The reason why we want to understand candlestick anatomy and why it's so important is because candlesticks appear on all time frames. Okay? The candlestick, you're going to find a candlestick no matter what time frame you're on, unless you're not using candlesticks, of course, unless you're using like a bar bar patterns or something, or a line chart. But for the strategy that we're using, we're always going to use candlesticks. So candlesticks appear on all time frames. The same structure occurs on all time frames thanks to these candlesticks. So whether it's the 1 minute time frame, there's going to be candlesticks, or the 1 day time frame, there are going to be candlesticks. And you can determine the structure of any given day by how the candlesticks, how that 1 day candlestick is formed. Candlestick anatomy. We're going to go over entry confirmation candles and why they are important. So I have 3 main confirmation candles that I use in my trading. These, well, the first one has many names. I like to call it the star pattern, but it is also can be called the spinning top, the morning star, the evening star, etc. The next pattern, and basically this one is we have a bullish candlestick, and then we have a indecisive candlestick here where it kind of turns into a little star, it looks like. And then we have a bearish candlestick right after that. So we can see this is somewhat of the start of a reversal. Here we have a railroad tracks. This is what I like to call when it just pushes up, closes, and then pushes down in the next candlestick. And last but not least is the wick. We have the wick where it's just a big wick into a zone. So you're going to see, I like to combine the candlestick anatomy with the liquidity zones. So I combine entry confirmation candles with liquidity zones, and I'll give you guys examples of this in the next slide. So can you guys identify the confirming candlesticks here? Well, I'll give you a easy example right here. Looks to be one here, and right around here looks like there's one right here. All right, yep, right here, obviously one. And then we can see, looks to be one right there. Now, on to the next one. Pretty obvious right here. A big wick past this previous high. Once again, right here, we'd say this is the next one. A big bullish candlestick followed by a next bearish candlestick. This is kind of a combination of the wick and the railroad track. And here we have another one. This would be, it looks like there's 2 right here. It looks like this is a nice star pattern confirmation candlestick. However, that star has a big wick on it as well. And also right here we have a smaller wick, but an obvious candlestick pattern of a railroad track. So we can see this is both targeting the lows and the highs. So if we see this structure right here, we have the high of the week and the low of the week. We can see price breaks to that low of the week, creating this new low for now. And we have that candlestick pattern going back up to the new high of the week, breaking out past that high of the week, and with the candlestick pattern to then reverse the market once again. Alrighty, it looks like we're done with hour 1, and we're going to go to hour number 2.